Today we'll go over our proprietary prohibiting indicator, trade above below moving averages. So if we open up our set file here and go down to our prohibiting indicators, we can see here we have a prohibiting indicator called trade above below moving averages, MA. So if this condition is true, we have multiple different moving averages. We have 6 moving averages we can choose from to turn true or false. As of right now, we only have MA1, MA2 as true. Now these MAs are customizable. We can change them. So this is MA1. It's the 1 hour 50 and the 1 hour 200. So if we turned MA3 to true, this would now consider the 4 hour 50. So we can change these values. We can make them any time frame we want. For right now, for this example, we'll just show you the MA1, MA2, which is the 50 and 200 on the 1 hour time frame. So what does this mean and how does it work? Well, if these conditions are true, that means that if we're looking to go long, we have to be above both the 50 MA, the red line, and the 200 MA, the blue line. If we are not above, the price is not above those two values, those two MAs, we cannot take a trade. So even if the EA was, or the core value was at a tier where it could trade into, it would not open up a trade due to that stipulation. Now, it has to be above both. So in this example over here, where we break above the 50 MA, since we have both conditions, the 50 and 200 as true, we cannot open a trade because we are below the 200. So if we're looking for longs or buys, we have to be above both. If we're looking for shorts or sells, we need to be below both. Now, if the core value was negative in a negative tier, we would be able to open up a short position on this day. All of these candles, we'd be able to open up a short position up until here. After we pass this candle here, now we are not allowed to open up any shorts and then any longs either, for that matter. But the core value, the price was increasing, so the core value was going up, so it was a positive core value. So we were looking to go long, and we were not able to go long because this condition was there. Again, for longs, we have to be above the 50 and the 200 MA. For shorts, we have to be below the 50 and 200 MA. So these candles here, all these would be able to short on these candles. Clearly, the price is moving up, so the core value is not going to be negative. It's going to be positive, so we would not take a short in that position. But once we cross this candle here, now we can't short anymore, and obviously we can't long because we are below the 200. We can use this on different time frames, so we can turn just the 50 on for, or just the 200 on for the 1 hour and the 200 for the 4 hour, and it'd have to meet both of those conditions. The 1 hour we'd have to be above the 1 hour, and we'd have to be above the 4 hour 200 as well. So this is customizable. For this example, we're just showing the 1 hour time frame here, and if we actually turned the conditions off, so let's just say we turn this to false. I ran an example ready for us, but let's say we turn this to false. This is what would happen. We would have opened up a long position here and here, so 3 long positions here, and we actually would have lost the trade because of directional liquidation. So we open up longs, and then we open up more longs here, and we would have lost, we would have kind of broke even here in a sense from directional liquidation, but overall we would have lost on the day. Now this is if the condition was false. This is why we have this condition as true. We use the MAs as support resistance, so in this case the resistance. As you can see, the price was climbing. It got close to the 200. It got rejected. Sorry, the 50 MA on the 1 hour got rejected. Came back up. It broke it. And then we had the 200 here to clear. And it took trades. It did not clear the 200. Came right back down. So for us to be able to be confident enough to trade, we want to be above the 50 and the 200 in the 1 hour. That's how we gain confidence, and we wouldn't be prohibited there. So this is exactly why we have this condition in place. Again, we did not take a trade on this day because of the conditions. Trade above below did not clear, the prohibiting was on, and we did not trade. So that's how that prohibiting indicator saves us. That's how it helps us, along with all of our other prohibiting factors, which is what makes our system so unique. Thanks for watching, and please smash the like button.